Well, ladies and gentlemen, this is Dennis Hudson at orangequant.com. I haven't done a video in so long I almost forgot how to do one. This gentleman here represents the stock market and the market makers and the bankers and banksters and all that crowd. They want your money and they are pumping this market up and up to draw you in, and people are flooding back into the markets. It's amazing. They're flooding back into the markets in droves. Now, the operative expression here is for us as the retail market out here, pigs get fat and hogs get slaughtered. And this guy we're looking at is definitely a pig. We are the hogs. If we rush in there and we don't know what we're doing, we're going to get slaughtered. Therefore, in a public service effort to avoid many of us getting killed, let's talk about the charts. Now, before I set off on this, I am not saying the market is definitely going to crash. I am not saying it's a bad idea to hold on right now. I'm just saying here's some stuff to look at, and you want to be careful because there's something you want to look for, and I'm going to show you what it is. Now, I'm talking to you if you're a long trader. You're betting the market is going up. That's mainly whom I'm addressing here. The shorts, they understand this. They're sophisticated. They know what to do. So I'm just going to talk mainly to the longs here. And I know you're a sophisticated long, and that's fine. This just might be something you missed. All right, check this out. This is called a W formation right here. That circle on the left. Here's another W formation. And then this ragged purple, heavy purple, is another type of W formation. And if you look closely at this, you'll also see some M patterns. All right. Remember, you can pause the video anytime just to look at what I'm talking about here to study the chart. Okay, in that first circle on the left, you have a W formation is what I'm talking about here, but there's also an M formation. We'll come back to that in a minute. That formation, you can see that price right here started to break above the middle of the W. Okay, once it firmly broke above the middle of the W, it confirmed a breakout and a run-up. Conversely, you have an M formation like this, and that right arm of the M did not break below the middle of the M. So it reversed and went up. All right? So let's just say you had a successful big W formation. Now over here you got another W, the next circle. This one, price went up, did not break above the middle of the W, and it failed, and you can see how catastrophic the failure was. Now, case in point here about these W's and M's, if the peak or the bottom of the left arm is different from the middle peak, then you want to draw a technical resistance line, and I'm going to draw that from right here, right across the top of that middle peak. So you can see that technically for the breakout to be confirmed, price on the right arm of this W needed to get above that red line there, not merely above the middle of the W. Now in the ragged purple circle over here on the far right, or not really a circle, it's just I drew it in, is a huge W, and you can see what happens when price fails to break above the middle of the W. But again, we drew the technical resistance from the middle of that W with that blue line across to the right arm, of the top of the right arm of that W. And price did not go, I'm sorry, hold on a second. Sorry, I got ahead of myself. That blue line is for our current situation. I want to talk about this W in the context of this sector here, from here, in other words, from here over to there. Okay, and I'm going to have to undo that. So let me draw another red line here so you know exactly what I'm talking about. This is the red line I should have been talking about here. And you can see that this price right here did not get up to that technical resistance. It got nowhere near it. That would have been the breakout point for it. So price collapsed. And if you'd been in it, it would have taken your money right along with it. All right, now let's talk current business. This is the W. I am going to make some big splotches here, big red splotches, so we know what W we're talking about. We're talking about this being the top of the left arm, the middle of that W, and then we have the peak of the W. I'm going to put this off to the side right there because price began to falter. So we made the peak of that W. And it means that price had to break above that blue line, which it has done, okay? But the problem is this is a weekly chart. So you only get a run for a few weeks, 2 or 3 weeks or so, sometimes more. So right now on the SP 500, it's kind of iffy. We could get another week or two before we have to start worrying. And here is why we really need to worry. This is the quarterly chart. Sorry, this thing is extending over to the right the way I've set it up. But we're talking about the quarterly chart here. And as you can see, in the big W, which I'm going to draw in for you here, so you know what I'm talking about. This is the big W we're talking about right here, okay? Now, right now we are not yet above that late 2007 peak, okay, which was 1576 right here, okay? We're not even above that. We're at 1560. If we use this blue technical resistance line I've drawn from the left arm of the W across the middle of the W, that happens to be, and it doesn't show it on here, I don't say it on here, it happens to be around 1593. And our quarter is almost ended. Remember, this is a quarterly chart. The next quarter, to get to that blue line, we'd have to get to above 1600. So bottom line, what I'm saying is, don't get too comfortable until we are firmly above 1600. Pigs get fat, hogs get slaughtered. And another glance at that weekly chart is very educational. So just be careful out there. Listen, here's what's going on. Psychologically, strategically, whatever you want to call it. This guy right here, him, okay? What he wants to do is make you think the market is going to keep going up forever. He wants to take your money. He's a pig. Don't be a hog and get slaughtered. With all these people rushing back into the market, you got to be careful, folks. I'm Dennis Hudson at orangequant.com. I hope you have a great weekend. It is now Friday, March 15, 2013. Stop by and see us at orangequant.com.